How's everybody this evening? Everybody's good?
Wonderful. How are you?
Excellent. Sound volume's good, so I'm going to kind of get into it. So I'm looking forward to speaking to you all about what I'm working on currently, putting all of my time into, and most of my sleeping hours as well, thinking a lot about this project, which is SALT Lending, and it ties very much into blockchain or Bitcoin, and also lending and debt and credit. So before I get started, I'm going to kind of go through a few fundamental background concepts that are in order for me to better properly head off some of the questions you're probably going to have about what SALT is, and then I'm going to leave most of the time for you to fire questions away and fire away at anything you want, whether it's SALT related or blockchain or Bitcoin or whatever. So getting right into it, leading into a SALT, and the first thing I want to talk about a little bit is what is good debt versus bad debt, because this is very important for the conversation. And my definition of bad debt first is when you charge somebody interest rates, which is typically known as usury, and or something that you know very well is taking advantage or predatory, and then cannot be paid back. So that is a role that it has a very negative connotation. You are typically in a situation where you are desperate, you need credit. It has this term that a lot of people are just very against, which is debt. But I think there's another side to that also, which is good debt. And so a little bit talking about what debt is when it's used properly. A quick analogy would be that we're back in history and somebody needs to go chop wood. I have an axe. I say, sure, I'll let you use my axe, just maybe give me a little bit of wood. That way I'm being compensated for the fact that what I gave, the asset, is being put to work, and there's an interest on top of that where both parties win. I consider that good debt. And that's going to become important more in a bit. So the second concept, just kind of to lay out front, is forms of repayment. And when you're looking to take out credit or debt, or more specifically, you are usually either based off of credit, which is your word, maybe your past, your history, whatever you might have in a credit score, a number, social net worth, or you have something to back that. Hey, let me borrow your car. Okay, well, how about you leave your wallet? That becomes collateral. So there's protected promises, and then there's, basically credit promises or verbal promises. So the next thing I'm going to kind of lay the groundwork on, I think most of you know, but I'm going to assume you don't for the sake of this conversation, which is blockchain technology. And there's a few specific features that we're leveraging with our company that are important to know. Blockchain technology is really the underpinning of what Bitcoin is. It's one element of that, and I won't bore you with what that is, but the advantage is that this is a way to do a transaction between two parties, peer-to-peer, without a middle person. It has the advantage of being able to contract a transaction, which people are calling smart contracts. In Bitcoin, it's known as a multi-signature. It just means there's multiple parties or multiple forms of verification needed to sign on the check. For example, if you needed to have two parties both sign on a joint account, that would be a multi-signature, which is something I'm going to talk about. And there's counterfeit proof. This is something I think is understated but extremely valuable. Not being able to have duplication of money, the amount of energy that goes into proving that a transaction or some unit of value is unique, is enormous, and blockchain kind of has an elegant way of removing that. Affordability, people may think that they've heard that maybe Bitcoin is expensive, but in all reality, running a system or recording transactions on blockchain is very affordable. Frictional or fractional, which is, it can be divided into many pieces. This is very important for the SALT lending concept, that you can take something that has value and break it up into very tiny pieces. Global and 24/7, both of these together. This is the first time ever that people have been able to have a marketplace, a value transaction that doesn't turn off, that is accessible to anybody with the internet. So that's the foundation of blockchain, which we'll come back to. Then the big topic, what is SALT? So SALT is a platform that is being built right now for credit markets. It's a technology company that specializes in allowing for parties to come together in a transaction that's credit-based, where you have a borrower and you have a lender. The borrower happens to be somebody who's looking for cash that can put up collateral, and that collateral is blockchain-based assets. So for example, Bitcoin or Ethereum, ultimately we think it will be everything will be on blockchains, and there'll be 1,000 different ways that you could put together a portfolio and lend against. And then on the lending side, it's people who are looking for traditional payment of whatever they're investing. So I have a bunch of cash, I want to see more cash in my account, I've got options, I'm going to either invest in bonds, I'm going to invest in real estate, I'm going to maybe do loans. This is another format for people to get an indirect exposure to the blockchain industry without having to know anything about it and still earn what they're looking for. So there's two sides of the coin here. One is somebody that is looking for cash returns, and the other is looking for somebody who wants to hold the asset that they have and spend some other type of cash. So an example of this would be a few different examples of why this platform exists. I'll use myself. You, over time, get a hold of some Bitcoin and then you decide you want a lot more. And it takes you quite a while to get that typically, but eventually, if the price appreciates, which it usually does in one of these assets, now you have some real wealth and you don't want to spend it. So early on I kind of realized, and I think everybody on our team realized, that as cool as it is to spend blockchain assets, cryptocurrencies, which you all should if you can, it's also more likely that you're going to want to save it. I think estimates from my time have been that 75% of the time people would rather hold on to it, given the opportunity, than sell or trade or spend it. That creates a situation where you have a giant marketplace, which we're bringing product to, of people who now have, there's $120 billion of value in blockchain assets, and that's just pretty much native ones. That's the new, interesting Ethereum, Bitcoin, you name it, altcoins, which I anticipate becoming exponentially larger as you see gold, silver, titles, deeds, stocks, you name it, moving into this format, right? We're creating a mechanism that allows for a pre-existing lender to use this service in a way that they don't have to reinvent, and then a marketplace of everybody that now owns this value to tap into it like property. So another interesting point is that you get taxed capital gains or some form of capital taxes on short-term or long-term on any transaction that you have because the IRS wants their money. However, it's the only form of value currently that does not have a marketplace where you can leverage that. So a simple scenario would be, anybody in here own a house? Do people own a house? Do you have a mortgage on the house? If you paid that mortgage off on the house and you had just equity, would you consider taking another loan out for some purpose? If you want to go buy an investment property, a boat maybe, some people like boats. Maybe not as much out here, but you could go to the bank and you could say, hey, here's my value, I would like to take out a loan, and they'll say, sure, you've got 100% equity in it, $500,000, we'll give you 80% loan to value. Okay, so we're basically doing the exact same thing, but creating a market where now Bitcoin and all other blockchain assets can be treated as property, with the equity being recognized, and why that's so important. So if you were to make an analogy of another company that we're kind of similar to, if anybody heard of Lending Club?
Yeah.
So Lending Club is basically a marketplace that's got a bunch of inner workings that allow for somebody to go on either end and say, hey, I'd like to get money, or hey, I'd like to invest money. The difference is that Lending Club is completely based off of your credit score. So everything they do is in mining your data, figuring out who you are, figuring out your history, putting you into a bucket, and saying, hey, you're either an A, a B, a C, a D, E, all the way down to F. And then based off of that, telling you what rate you have to charge in order to get the money you want. And the thing about that I would say is bad debt is that your primary force of repayment, your means of repayment, are predicated off of your income and your history, both of which can go away immediately. So imagine SALT Lending being Lending Club, except for the criteria is you have to back your promise. We allow you to create a profile quickly, add your collateral, so you've posted your collateral. We're going to require a loan-to-value ratio to protect it for ups and downs, because it's another question will come up. And now, if you don't make good on it, at least the lender is taken care of. So far, everybody with me? Okay, so the other thing I wanted to talk about is that we're currently in a beta startup. We're soliciting kind of early feedback, and if anybody's interested, I know we're going to talk here, I'm sure, either in any form of what we're doing, whether it's just more information after we're done in Q&A, if you're looking for a job, if you're looking to be a borrower, if you're looking to be a lender, if you're looking to be an investor, anything you're interested in, hit me up and I'll be interested in that. So that's kind of SALT in a nutshell, and I wanted to take advantage of a couple minutes also to talk about something that we're also doing. There's two pieces left I want to talk about, then I'll fire away and you guys can just open up on me. One is we're creating a nonprofit foundation that all of the proceeds that come in, a portion of those proceeds from our revenue streams, are going to go into a financial inclusion initiative that we're creating. And to give you an example of what this is and why it's important, people talk about financial inclusion all the time, but a lot of times it's mostly about protecting against somebody discriminating and working on how do we service people in inner cities or places where people have less access and not discriminate. Our initiative is, I think, much more interesting, and that is going to be that we're going to have a lot of Bitcoin and money coming into us in cryptocurrencies. Our initiative is going to be to go to anybody who provably can't get a bank account, somebody who is unbanked for whatever reason, if it's a legitimate reason, and we are going to start an account for them and back it with cryptocurrency assets to prove the case. They're going to be able to borrow against that one time, and we're going to help teach what good debt is, which is if you pay this off, you now have an appreciating asset. And if you're smart, you can not only do that, but you can grow that and turn it into a line of credit, something that they probably have never had. If you don't, the consequence is you're back to square zero, and you're still unbanked. So, in the future, we kind of have the belief that blockchain is going to become extremely powerful and transformative globally to everybody, and it's going to open up liquidity and options to financial markets that have never existed 24/7 all the time, and that we want to be a part of that and help people treat us properly and leverage it. So the last thing I want to talk about is something I kind of consider leveraging liberty, and if I wanted to talk a little bit about my perspective on liberty, just because this is Liberty on the Rocks. I actually only got involved with SALT, with the current parties that I'm working with, the co-founders, because of meetups like this. Going back to 2012, I helped host a Bitcoin meetup on a monthly basis, and I met lots and lots of interesting people, and my priority there was to help meet people that eventually I could create a project with. And interestingly enough, if I had not met some of those people who are in the crowd here, if I hadn't met those people, they wouldn't have introduced me to other people, SALT probably wouldn't happen. So my point being, I wanted to talk a little bit about how important I think it is to just interact, how to leverage your own liberty. So there's a saying out there that your network is your net worth. And I think in the liberty community, it's very important for us to remember sometimes that everybody in here has the potential to strike a deal with each other and create an entrepreneurial startup. There's probably a ton of opportunities nobody's even thought of that could come out of just having that one extra beer, chat with each other, becoming friends, and take advantage of the fact that everybody in here kind of has some common goals. The only reason I got involved with Bitcoin was because of liberty. The only reason I'm building SALT is because I believe in financial liberty. To me, liberty and freedom are pretty much right in there, and it's I want to do what I want to do, whenever I want to do it, with whoever I want to do it, when I want to do it, right? Which is kind of just being totally free and sounds kind of selfish, but in reality it sounds great. And I think that if we all work together, you have an opportunity to make connections you would have never thought are going to manifest into something much bigger, and you should do that. So that's kind of all I wanted to say. I wanted to share a little bit about that, and I'll turn it over for Q&A.
Sean.